Navigating your life insurance options can sometimes feel like solving a puzzle, especially when you consider making changes to your coverage. Perhaps you are wondering if you can adapt your current policy to better suit your evolving needs, like changing from a temporary plan to a permanent one. Yes, there are definitely eligibility rules for policy conversion. These rules are put in place by insurance companies to ensure that the process is fair and manageable for both the policyholder and the insurer. Understanding these rules is a key step in planning your financial future and ensuring your coverage aligns with your long-term goals. The primary reason for these rules is to manage risk and maintain the financial integrity of the insurance company. When you convert a term life policy to a whole life policy, you are typically granted guaranteed insurability, meaning you will not need a new medical exam to qualify for the new permanent coverage. This guarantee is a significant benefit, but it is also why insurers establish specific conditions around conversions. These conditions often relate to the time frame within which you can convert, the type of policy you hold, and sometimes your age at the time of conversion. It is all about balancing the generous offer of guaranteed coverage with sound financial practices. To check your eligibility and explore your conversion options, your best first step is to carefully review your existing term life insurance policy. Look specifically for a conversion privilege clause, which outlines the terms and conditions for converting to a permanent policy. This clause will typically specify the conversion period, such as up to age 65 or within a certain number of years from the policy's issue date. After reviewing your policy, reach out to your insurance provider or a trusted financial advisor. They can provide precise details based on your specific contract and guide you through the available whole life products you are eligible for. An important insider detail about policy conversion is the concept of a conversion credit or a premium credit. Some insurers offer this when you convert, especially if you have been paying higher premiums on your term policy for some time. This credit can help offset the initial, typically higher, premiums of a new permanent policy, making the transition more financially accessible. It is a way for insurers to reward long-term policyholders and encourage them to maintain continuous coverage, ensuring their financial protection remains robust. Understanding the eligibility rules for policy conversion empowers you to make informed decisions about your life insurance. By knowing your options and the conditions attached to them, you can proactively adjust your coverage as your life changes, securing enduring financial protection for your loved ones without the stress of requalifying for coverage.